So by a show of hands, you should be able to do the little hand raise through the app. Who here currently has used in the past or currently is using a, VA loan? Yeah, I know you, Ryan. Okay, all right. So we got a couple. Okay, cool. Well, hopefully I'll be able to either confirm some stuff you guys already know, or at least maybe clarify some things that either you're confused on, or maybe even clarify some misconceptions that you might not even know are misconceptions yet. So, kind of the point of this is just to make sure everyone's on the same page with actual information. Um, that way, it helps you guys kind of navigate the waters a little bit better if and when, hopefully in the future, you guys do start to use your VA loan and VA, home loan benefits. And that way you guys aren't, lost in the sauce. Or if you guys hear a misconception, you guys will be able to correct that kind of on the spot and be like, no, that's not entirely right. Because unfortunately, they're even the people you think should know a lot about them, the real estate agents, stuff like that, even some lenders, not everyone was very well versed in the VA loan. So it's kind of why I wanted to do this, make sure everyone's on the right page. But we're gonna give it about one more minute, and then we'll go ahead and start it off. All right. If anyone tries to join uh, while we're going through, just bear with me, and I'll kind of pause what I'm saying and let them in. We're going to go ahead and kick this off. So, hey everyone, my name is Sergeant Robert Keeling. I'm currently active duty U.S. Army down here in San Antonio, Texas. Kind of jump between Lackland Air Force Base and Fort Sam Houston. So today we're going to be going over the VA home loan crash course. I'm part of the veteran lending team, and we're just a lender that operates all 50 states, and we're actually comprised of 100% current and former military. So kind of unlike some of these big box stores, we're actually veterans that know a thing or two about our lifestyle that we've all been a part of. So some things we're going to go over today is going to be just the general loan process, the VA loan features, and kind of how it's unique and why it's beneficial for us. A brief overview of history, who's eligible, kind of some talk about credit a little bit, talk about our entitlement and our COE, which you hear COE, that's your certificate of eligibility. Excuse me. We'll talk about the home types in terms of what types of homes you can buy with a VA loan. There's actually a few different types. The VA loan variations, we'll touch on that. And then we'll finish up with kind of squashing some misconceptions that I hear quite often, and wrap up with a Q&A session at the end. Before we jump into it, can everybody hear me all right? Can everyone see me all right? Can everyone see the slides all right? Cool. All right, guys, so I'm not going to jump into each bullet point too in depth because we're kind of going to go over some of the stuff throughout the slides. But here is just the general loan process. I know for people who haven't used a VA loan or haven't purchased a home before, it does kind of seem daunting and a bit confusing at times when you think, okay, well, I know I end up with keys in my hand after I sign a bunch of paperwork. Well, what's before that? So the main thing I am going to touch on in this slide is the pre-approval being the first thing you see there. That is going to be the first thing that you're going to want to get taken care of when you're searching for a home. And why is that important? Any realtor that's worth their weight in gold is going to tell you that they're going to need a pre-approval. And what a pre-approval is you go to a lender, fill out their application, and a good lender will have you also submit some documents, some bank statements, such like that. They'll go over everything, look at your income, your debts, your assets, your liabilities, and be able to let you know kind of where they're going to be able to pre-approve you at that purchase level. You'll take that pre-approval, and that's based on a lot of things: credit score, income, debt. You take that pre-approval letter to your realtor, and when you guys put an offer on a house, you're going to be showing that pre-approval letter to the sellers to show them that you guys are serious, you guys have something backing you up, and you're just not wasting their time. That's kind of how they know that, hey, this offer is actually worth it. Kind of going on the pipeline there. Obviously, then you make an offer on a home, do all your inspections, appraisals, goes maybe submit some more documents that processing might ask for, underwriting might ask for some stuff. And then at the very end of the day, get your closing disclosure, get everything finalized, and sign 1,000 documents. And now, I don't know. The last one I did wasn't too bad. First couple felt my hand cramping up, but end of the day, you'll end up with some keys in your hand and a brand new home. So some unique features of the VA loan, and you guys may know all of these already, but if not, biggest one is going to be the down payment requirement. So unlike conventional FHA, right, the other two major ones, there's no down payment required for a VA loan. VA loans will allow you to finance 100% of that loan. So instead of putting, 3.5%, 3%, 5%, 20% down on a home, you don't have to put any money down for your down payment. Additionally, kind of tying into that is there's no PMI. Now, PMI is private mortgage insurance. VA loans do not have that. For FHA and conventional loans, if you were to put less than 20% down, you'd have to pay what's called PMI. That's kind of like the VA's funding fee, which we'll touch on, to where it helps, it helps kind of back up your loan. Good Lord, I apologize, guys. Because you're not putting as much down, you're not putting that 20% down, it kind of helps the bank say, okay, well, you're gonna pay a little bit more each month, and that's gonna basically make me feel a little bit better about lending you this money when you're not putting as much down. For VA loans, even though you're putting 0% down, you're not paying any additional kind of fees monthly like that PMI. Competitive interest rates, you'll see pretty much everywhere that's posting rates here and there. VA loans typically have better rates than either FHA or conventional. And lastly, the closing costs. You are going to see traditionally just less closing costs associated with a VA loan that's matched up apples to apples with a FHA or conventional. You'll get those less closing costs, so less money out of your pocket. Now, touching on that real quick, just because people hear 0% down and they think no money at all. There are still closing costs associated with the VA loans, but there are ways to mitigate those closing costs in terms of having the seller help out. And we'll touch on that a little bit later in the slides. Also, if you guys have any questions during these slides, I'd ask that we keep them to the end. But if you have anything that pops in your head that you're not going to remember towards the end, just let me know and we'll go ahead and answer them right away. So a quick history. The VA loan was actually established back in 1944 with the Bill of Rights, the GI Bill of Rights. And it was created basically so that when veterans were leaving the military, because, well, even now, but especially back then, they didn't make that much, right? They didn't really have big pockets. So the government basically wanted to say, hey, thank you for your service. Here's a way that you guys can become homeowners with very, very little, upfront costs, low cost of home financing, kind of easing into that transition from military life to where, maybe they lived on base and stuff, especially back then, into civilian life. So kind of the first thing is going to be, are you eligible? And real quick, I know we have a retired reserve and I think retired guard from a couple of your names I remember, but do we have anyone here that's currently in the guard or the reserves? Looks like we got a couple. Okay. Okay. So it's a little bit different for active duty, and that's active duty regardless of branch, and for the National Guard and Reserves. For active duty, you just need to have 90 days of continuous service. So for a lot of people, as soon as you're done AIT, you're qualifying, right? Between basic training and your AIT, you're going to be good to go. Now, for National Guard and Reserve members, you're going to need at least 6 years of service, or if you're in a unit that's maybe deployed or a unit that activates quite a bit, as long as you have at least 90 days on active duty, you're also eligible. Those are going to need to be backed up by active duty orders to prove that. If you can't find, or maybe you're like, oh, I think I have 90, stuff like that. Maybe you're just not entirely sure. All you have to do is either talk to a lender, or you can do it yourself, and we'll look at your COE, that certificate of eligibility, and that'll let us know too if you're actually eligible yet or not. We're going to touch on that here shortly as well. Additionally, something interesting is surviving spouses or service members who have passed away in the line of duty. They're also entitled to VA benefits, so kind of extends through them as well. Now, credit and debt to income. Credit, that's going to be a big one that a lot of people that I hear, a lot of people talk about, and that a lot of you guys may have heard before as well. Let me just make this very clear up front. The VA themselves do not have a minimum credit score. The lenders are the ones who set the score. A lot of lenders, and I'm sure a lot of you guys have probably heard, a lot of lenders have that 620 minimum FICO score. And I'm sure a lot of you guys have heard that number tossed around, and maybe a few of you, are around that, maybe 580, 600, 610, and you're like, well, shoot, I guess I don't qualify. I guess I need to just wait, right? So that's not entirely true. There are a good bit of lenders out there that do lower scores. Personally, we can go down to 500 with some other stipulations associated with it that I won't get into currently, but there are options out there. So if you hear yourself, or you have someone else coming and talking to you, and they're like, oh yeah, no, I gotta work on my credit, man. I'm only at 590 right now. I can't buy a house even if I wanted to. Please do me a huge favor, guys, and squash that. Squash that misconception, because that's not true. I hate seeing people miss out on the possibility of becoming homeowners just because they think that they don't qualify when they actually do. Debt to income. So debt to income is exactly what it sounds like. It is your total monthly debt divided by your total monthly income. You'll hear verbiage such as front end and back end debt to income, or DTI. So let me let someone in here to the call. You'll hear front end and back end. Front end is what's called your housing debt to income. Take your housing payments and your income. And that's kind of what it's talking about here with the 41%. VA is one of the higher debt to incomes. So a lot of people that may have that higher debt, or maybe don't have as high of an income, because again, let's face it, military income itself isn't always the best. You're still able to qualify up to about 41%. Over that, it's flexible. It's not an automatic denial, because the VA themselves is a government entity. They're backing up your loan. There is some flexibility. So in certain situations like that, we may just need additional documentation, may need to kind of manually do some things. But again, that's a conversation to have with a lender so that they can help you figure out what your debt to income is. Oh, so let me get my mouse here, guys. Sorry about that. All right, so kind of into some meat and potatoes of it. Entitlement and certificate of eligibility. That's that COE we talked about earlier. And actually, while we're here, has anyone here pulled their own certificate of eligibility? Does anyone already know what I mean by certificate of eligibility? Johnny, I know we talked about yours, Clayton, Ryan. Okay. Okay, awesome. So a couple of you guys. And I'm sure a lot of you guys have heard of entitlement when it comes to your VA loan. So for entitlement, the VA guarantees 25% of your loan amount. And that amount that they are guaranteeing is what's considered and what's called your entitlement. Borrowers, you guys can use your entitlement multiple times so long as you have enough of it. And we'll get into that and kind of how to calculate that here shortly. The VA, I mentioned this earlier, the VA does charge a funding fee to help cover the cost of your loan and kind of help to be able to provide that guarantee. We'll get into the actual math of it here in a minute, but the funding fee can either be paid at closing, so you pay it out of pocket, just get it out of the way, or you can tack it to the end of your loan. So if you had a $300,000 loan for a house and the funding fee was, we'll call it $9,000, right? Then your total loan amount will be $309,000. There's some pros and cons to that. Obviously, if you pay it up front, excuse me, guys. If you pay it up front, it's out of the way. If you have it as part of your loan, yes, you're accruing interest on that over the years, but it doesn't really, it's not going to be a whole lot. It's not the end of the world. Typically, you see people just adding it to the end of their loan so that it's less upfront cost you have to pay. The funding fee does vary, whether it's your first time using the VA loan or a subsequent time, or based on how much money you're putting down. Again, you don't have to put any money down, but the VA does actually lower your funding fee if you put some money down. I apologize, guys. It is really dry around my area. Oh, Lord.
Not used to Texas yet,
So
are
you hear
you?
entitlement. What's that? So you hear entitlement, you hear certificate of eligibility, you hear those. Okay, so what's my budget? Right? Let's kind of get, all right, how much can I afford? I've heard that maybe there's a limit on how much you can borrow. I've heard there's no limit, but there's got to be, so what's going on? If you have not, if you do not have outstanding VA entitlement being used currently, so either you don't have a VA loan currently or you've never used your VA loan, there is actually no limit that the VA has on you. It is going to be up to the lender. So if you qualify for a $1 million home because let's face it, you've probably gotten out of the military at that point and have a nice job, right? So let's say you qualify for that $1 million home from your lender, the VA will back that up and guarantee 25% of that so that you don't have to have any down payment. Okay, so what about when I do use my VA loan? Because again, I mentioned you guys can use it multiple times. We'll get into that. But let's say I've used it once. Well, now what? So if you've used your VA loan and you have one outstanding, you have one currently being used, your limit is going to be the conforming loan limit minus your used up entitlements. And I'm going to show you guys some math to make that make some more sense to you. But basically, if you haven't used anything, you're not using anything, the sky's your limit. If you have some stuff outstanding, that's when you start getting that ceiling. Come on, mouse. So I mentioned certificate of eligibility quite a few times so far. Well, how do we get it? Well, besides talking to myself or anyone on our team or any lender that can pull it for you, you can actually pull it yourself. You're going to go to the website here. It's just va.gov, and you can either follow this full link or click on the housing assistance, click on the VA-backed home loans, and the eligibility tab. On the left-hand side of your screen, you'll see a button that says request your COE online. It'll prompt you to go through some logins. You can log in using your CAC card. You can log in using your DS login email password type, username password. And you can also log in using, I believe it's ID.me if you've set that up to confirm your military status. Once you've gone through all those menus, you'll get to this screen here. A lot of the times you'll get to this screen where it says, congratulations on your automatic COE. If it doesn't, you'll have to fill out a request form and get it requested. Typically, if it doesn't give you one automatically, reach out to me, reach out to anyone on our team, reach out to your current lender, and just ask for their assistance if you can't figure it out. It's no worries. Just some people doesn't populate automatically for. But luckily for me, we're gonna actually see my COE, my personal one. So luckily for me, it's populated. So we click download your COE, and it brings you to your certificate of eligibility. We're going to zoom in here in a second, so don't worry about getting squinty-eyed towards your screen. This is my personal COE. So we're going to kind of go over my personal history with it and talk through it. Your COE gives obviously the name, your entitlement code. The codes mean things, but not to worry about. Branch of service, and tells you if you're exempt from your funding fee. I'm not exempt. We'll get into the exemptions here shortly. Excuse me. You can see in the middle here, I currently have 2 VA loans out. I have one from when I was back in Tennessee, and my current one here in Texas. You can see the date, the loan amount, the total loan amount. That total loan amount does include the VA funding fee attached to it. You'll see the date that you closed on your loan. So I closed on this one and back in October. And you'll see the entitlements charged to you. At the bottom there, you'll see a total entitlement charge is just adding up all of those. You can see there's 5 slots. I mean, essentially, and we'll get into the limit number here soon, but essentially you can have as many VA loans as your entitlement can handle. Depending where you live in the country, housing is going to be cheaper. Housing is going to be more expensive, right? If I had the ability to only buy houses that cost $100,000, I could have, 6, 7 VA loans out at once, right? Now you've heard me say conforming loan limit a couple of times. What does that mean? Fannie Mae and Freddie Mac, which those names don't mean anything to you. It doesn't matter. They're just the government agencies, right? They push out a yearly loan limit, conforming loan limit. The VA only worries about their 1 unit limit. So you kind of omit in your mind the other 3 columns there. As you'll notice here on the screen, all the loan limits are the same. That's going to be true for about 95% of the country, maybe even higher than that. There are going to be some places in Alaska, like Los Angeles, right, in California, and a few other spots around the country that are going to have a higher loan limit for that 1 unit, and that's just due to cost of living. Really simple to find. If you think you're going to go somewhere and move somewhere that has a really high cost of living, like some places in California, up in Alaska, etc., just either talk to your lender or Google the Fannie Mae, Freddie Mac loan limits and scroll. You'll find this PDF. You can scroll through it, and it'll give you the exact amounts. So we saw. I'm sorry, we're going to go back. So we saw that we're going to use this number because it's going to be right about 9/10 of the time. 766,550. So let's keep that in mind. Let's go back down to our COE. In the entitlements charge section, you can see I've used 93,000 on my first one and just under 77 on my second one. Okay. Hypothetical, I'm about ACS again. I'd like to buy another house. I don't want to sell the houses I have currently. I want to keep them. Well, shoot, how much do I have left? Let's get into that. To find out how much you have left, whether you have 2, 5, 10, or 1 VA loan currently outstanding, you're going to take the conforming loan limit, which again may be different in certain areas of the country that you go to. You're going to multiply that by 25% because the VA backs up 25% of your loan, giving you $191,637 as your kind of entitlement limit, if you want to say. You take that entitlement limit and you subtract out the current entitlements that you have used. That leaves me personally, these are my personal numbers, I have $21,900 worth of entitlement left. Okay, so what does that mean, purchasing power? Again, that represents 25% guarantee. So we multiply it by 4, giving us $87,630. If I were to go out and try to buy another house, that would essentially be my budget right now. Obviously, I'm probably not going to buy a house for that much. So if we look at the math again, from before I bought this current house, you'll see that before I bought this current house I was in, I had $98,000 in entitlements, meaning my budget was just under $400,000. So knowing that, my lender at the time, even if my lender pre-approved me for $500,000 based on income and such, and we'll get into this a little bit later too, but for the grand scheme of things, you could only purchase up to $394, whatever your entitlements. Sophia, do you have a question?
Hey, yeah, I do. Thanks. Why did you multiply by 0.25 on the conforming loan limit?
Perfect. So if we go back, you're talking about right here, correct?
Yes, the 0.25.
So 766 is the conforming loan limit, and we're trying to figure out how much entitlements we have left right now. So because your entitlements represent 25% that the VA is going to back for that loan so that you don't have to put a down payment, we're going to multiply that loan limit by 0.25 to get us 191. And that 191, that represents the conforming loan limit entitlements as a whole. So if you were to spend exactly $766,550, the exact conforming loan limit, the VA would back up and you'd be using $191,637.50 of entitlements. Does that make sense?
Yes, absolutely. Thanks for breaking that down again.
Absolutely. So then going back through, you would take that total entitlement number, subtract out your used entitlements, multiply by 4 to get your usable loan number. Now, you may ask, seems like a lot of math. Why wouldn't I just go 766 minus loan number 1 minus loan number 2, loan number 3, whatever? And you can do that. And that's a super quick and easy way to go ahead and get a rough idea of where you're at. But you have to remember that loan value typically includes your funding fee. And your funding fee is not part of, you don't use entitlements for your funding fee, if that makes sense. So if I just did the simple math, instead of 394, I may have come up with about maybe 400,000. So it would have been accurate to a degree, but not the most accurate. Did anyone have any questions real quick before I move on about that entitlement and calculation and what entitlement is? Sophia, did you still have a question? I see your hand still raised. Just want to make sure I answered everything. Okay.
No, sorry, I didn't realize you could take it off.
No, you're good. All right, cool. So what if you run out of entitlements? What if you're in my situation right now where I can only buy a house for $87,000? That's really not going to cut it this day and age. You have 2 options, and then there's kind of a third option that I'll throw in there as well. Of course, you can sell your property. So if I were to move again, maybe I would sell my property that's back in Tennessee. Maybe I would sell this house that I'm in Texas. Maybe I'd sell both of them. Maybe I'd keep one. And that would open up some more entitlement for me. Again, I'd still be under that conforming loan limit because I would still have a VA loan outstanding. But if I wanted to, I could sell off one or both of the homes. Again, if I sold off both homes and had no outstanding VA loans, remember, I'd be able to purchase up to as much as I'm pre-approved for, whether that's 400,000 or 4 million. I mean, I've seen some pretty high entitlement usage on some people before. It's pretty interesting to see that. So, second, you can also just refinance. You can refinance out of your VA loan into a conventional loan. Typically, that's going to be the case when you have some good equity build up, so you don't have to put any money down or transition into paying PMI, and you'll use your one-time restoration. It's called one-time restoration because, barring some situations, some circumstances, the VA typically it's a kind of a one-time good faith type thing. Typically, you're going to see people selling their properties to be able to use their VA loan again. The third option I want to touch on is one that not many people are going to use because it requires a lot of upfront capital. But let's say, like me right now, I have that $87,000 worth of home buying power, right, with my entitlements. If I went and found a home for $287,000, we'll use a good round number. Basically, the VA entitlements would cover 87,000 of that, and then it'll all be under the same VA loan, but I would have to come out of pocket 25% of the remaining balance. So 25% of 200. So I'd have to come out of pocket $50,000. Now, again, if that's what you want to do and that makes sense in your situation, more power to you. You just typically don't see that one very often for obvious reasons. All right, so scrolling down, this is going to be the bottom half of your COE. It's going to let you know your funding fee kind of situation. So we talked about the funding fee, and what is it? Well, it's a charge again that can be added to the end of your loan, to the back end of that loan, that basically just helps the VA be able to guarantee that down payment, so you don't have to put the down payment. On the little chart here, you'll see most people are going to be in that top line, right, with $0 down. If it's your first time using your VA loan, it's going to be 2.15% added to your loan. So for every $100,000, $2,150 is added to the end. And anytime after that first VA loan purchase is going to be 3.3%. So for every $100,000, $3,300 added on. So $300,000 house, $9,900 funding fee, total of $309,900 would be your total loan amount. Does that make sense to everybody? For the funding fee, not everyone has to pay it. Thankfully, there are some circumstances. Excuse me. And sorry, if you do decide to put some money down, which doesn't happen all the time, but you can. If you put 5% or more, it drops it down. 10% or more drops it even further. So less of a funding fee on the back end there. So exemptions, right? Not everybody has to pay the funding fee. Some of the biggest, the most common ones are going to be disability, Purple Hearts, surviving spouses. Those are the major three. Yes, Anthony?
So is it anyone with a rated disability, or do you have to have a certain percentage?
Great question. Awesome. I'm glad you brought that up, because yes, 10% or more disability grants you an exemption from the funding fee. So while I do not advocate wasting government resources, don't just cheat the system. Sorry, let me add somebody into the call here. Don't cheat the system, but make sure that your soldiers, when they're coming up on their EPS or their retirement, make sure you guys claim everything that you genuinely and realistically should and can claim. Because again, if you get that 10% disability, you are exempt from that funding fee, saving you a good couple $1,000s in in your loan costs, and of course, saving you some accrued interest over time. Excuse me. If you are, if you should have been receiving disability when you closed on your loan, let's say you closed on your loan in October, your funding, you weren't you didn't have disability, so you had to pay your funding fee. A couple months later, VA is getting to you, right? And they backdate your disability to June or July. If you were supposed to be getting disability when you closed on your loan, you can actually call up your lender and you can actually get your funding fee refunded to you. And by refunded, I mean obviously taken off your loan amount, right? They're not going to cut you a check for it, but it'll be taken off your loan. So again, saving you some interest accrued down the road over the years. So what can you buy with a VA loan? I'm pretty sure you guys all have some idea of this, but I do want to kind of squash a few things, make sure we're all on the same page. So obviously a few of these are just for comedic relief, right? You can't buy dilapidated houses, rundown shacks, outhouses. VA is not going to fund a mattress on the side of the street or your camper van. You also can't buy a yurt or a hotel with it. So the big three are going to be from top to bottom in the middle there. It's going to be your multifamily residential, your manufactured homes on permanent foundations, and your single family homes. So let's start with a single family. This is going to be the most typical one you see. I assume everyone knows what a single family home is, especially by the picture here. This is a statistic that isn't backed up by data, but I'd like to say probably 95% or more of VA loans end up closing with a single family home, right? Most typical home. There is no limit on the size of the home, the number of bedrooms and bathrooms, or the acreage. If you can get pre-approved for it and you have the entitlements for it, you by all means can buy that 10 bedroom, 13 bathroom, 1,000-acre property out in Montana, right? That's at least my dream. One of these days, maybe not a house that big. It's a lot of cleaning, you know. But if you can qualify for it, you can close on it. Next, we're going to touch on manufactured homes. Now, these are becoming popular a lot because they are a lot cheaper, right? They're just as good quality these days, and they're obviously quite a lot cheaper. So you'll typically see manufactured homes on larger pieces of land because they're a lot cheaper to put and a lot easier to construct there. There are a few stipulations on manufactured homes. 1976 is the cutoff date for age, June 15th, 1976. So got to be newer and constructed, manufactured after June 15th, 76. There are some size requirements, single wide versus double wide. There are some minimum square footage requirements. And the biggest thing is that it has to be affixed to a permanent foundation. It has to be a permanent foundation. It cannot have any of the towing gear. Wheels have to be removed, tow hitch, running gear. It cannot be movable, right? It's got to be, if you see something like this photo, that's going to be more likely than not on a permanent foundation. Scrolling up a little bit. Joseph, you have a question?
Not a question. If you don't mind me inserting a comment for that previous slide,
Yes, sir.
affidavit of a fixture is what from the township. So that's all I wanted to jump in with. Thank you.
Thank you, Joseph. Just so you guys know, Joseph is a realtor about, I think he said 30 minutes south of Detroit area.
About an hour north of Detroit, 30 minutes from Flint,
Hour north of Detroit.
but I service both areas
Gotcha, that's
as
what
well.
it was. Awesome.
Thank you.
Good to know. Good to know. Yes, sir. So touching on multifamily, whether you knew or not, you can't actually buy more than a 1-unit property with your VA loan. 2 to 4 units is going to be considered your residential. More than 4 units gets into the commercial realm, where you're not really going to be able to find that funding. The VA says you can buy 2 to 4 units so long as you occupy one of those units. It can be in this picture here, like this, where it's kind of some townhome rows. It can be a small apartment building where maybe there's one main entrance and then there's 4 doors on the inside, upstairs, downstairs type deal. It doesn't have to look like this photo. Must all be attached. You cannot purchase 4 individual homes, even if they're on the same lot. That's not considered multifamily residential. And a key factor on this is you may be able to use 75% of the rental income.
And he's gone.
Hey, Keeling, we lost your audio.
Uh-oh. Robert. If you guys hold on real quick, I'll get a hold of him. Oh, geez. All right. Hey, guys. I'm Ryan Hemhauser. I'm with the Veteran Mortgage team as well. I am the marketing manager. I can kind of fill in for a little bit until we get Robert back. Just give me 1 second. Before we move on, does anyone have any questions about anything that Rob's been talking about? Yes.
So I just had a quick question regarding like the eligibility for National Guard members, because I'm currently AGR. So does that qualify as the same active duty time for like being eligible for it, or is it still a full 6-year contract before we can use it?
How long have you been AGR?
Probably coming up on 90 days. I just got on.
So you would need so you won't need the 6 years. You would be considered like active duty once you hit your 90.
Okay, perfect. I wanted to make sure. It's all been a little confusing with like benefits and stuff switching over. So thank you.
Oh, I completely understand. I've been National Guard, active duty, and reserves, and I'm like, I don't even know what I'm entitled to anymore.
Yeah, that sounds like a disaster.
Are there any other questions? No. I don't know if Rob went into this, but I just went through the home buying process myself. If you do not have here we go. Robert's joining. If you do not have a VA disability rating, before you put in for a loan, make sure you file an intent to file, because I just got my VA funding fee back because I just got rated, but I had to pay it originally. So thank God Rob's back.
So with that intent to file, I don't know, is there a certain time limit when you expect to make
You
that
have 1 year.
claim? 1 year? Okay, thank you.
Yeah.
Can everyone hear me?
Yes.
You're good.
Oh, Ryan, you can hear me?
Yeah, we can hear you.
Okay, yeah, sorry about that, guys. That was the power shut off. There was the loudest clap of thunder I think I've ever heard in my life, and then the power came back on. So that was quite interesting. Sorry about that. I will try and we're almost done here, so it shouldn't be too much longer to be able to get you guys out of here. But thank you guys for bearing with me. I did not know it was storming that bad outside. So, quick recap in case I'm not sure where I cut off. So, multifamily, 4 units max, has to be attached, and you can use up to 75% of the income from the other units as potential qualifying income. Now, by what that means is, let's say this house example here, you're living in 1 unit, the other 3 are rented out for $1,000 each. That's the fair market value. The lender only pre-approved you for $300,000, but they want $400,000 for the house, for this apartment townhome row. You can use $750, 75% from each unit, so $750 times 3, adding that to your personal income as qualifying income to help elevate your income and potentially qualify now for $400,000 instead of the 3. I mean, does that make sense to everybody? Basically, whether it's 1 extra unit, 2 or 3 extra, depending on the market. Now, the appraiser want to determine that market value. Like personally, I've gotten more rent out of my units than what the appraiser said, which is good, but I had to go off of what the appraiser said that the fair market value was going to be. And some lenders may require documented experience as a property manager to utilize that rental income. Property management is not for everybody, especially self-managing. This is one thing specifically I plan on doing an entire separate class for, kind of how to use your VA loan to set yourself up for success in terms of passive income and investments, really. But it's not for everybody. So we'll definitely talk about the pitfalls, ups and downs, stuff like that. But a lot of lenders will suffice with just the answer of, hey, I'm going to hire a property manager. I'm not going to do it myself. So just something to consider. Do you have any questions about the 3 types of properties that you can purchase with your VA loan? All right. So moving on, the 3 S's. And if you haven't heard of what that is before, you'll hear it now. The 3 S's are going to be sound. Now, that's not sound vocally. That's stability, right? And these 3 S's are what the VA looks for when they're saying kind of yay or nay on the house, right? The condition. So sound, safe, and sanitary. And they're kind of exactly what they sound like. Sound. Is the house falling apart? Is it structurally sound? Safe? Are the does the stairway have handrails? Does the fireplace need additional ventilation to function properly? Is the electrical shot? Is the plumbing outdated? Is the roof have a hole in it, right? Sanitary. It needs to basically be not a health hazard, for lack of better terms. If there's sewage backing up through your shower, that's probably going to have to be fixed before the VA is going to sign off on that one. So those are kind of the 3 basic sound, safe, sanitary, the 3 S's. If you're ever thinking, I don't know, is this house going to be able, if it doesn't meet one of those 3, send it to your lender, send it to your real estate agent that's knowledgeable on VA loans. Ask them. They're going to be the ones to be able to help you out a lot more as well. Don't just write it off just because you think, well, maybe that doesn't work. Of course, if there are issues, right, during the appraisal or inspection that makes the house not sound safe or sanitary, that'll be brought up. And at that point, right, that's when you would have those discussions with the sellers on, hey, what are you willing to fix so that we can get this thing sold? All right, so I'm not going to spend too much time on these next couple slides. Some of these will be classes in of their own, like the VA one-time construction loan, one-time close construction loan. Basically, that takes you from bare land to keys in hand, all in one loan. So mitigating some closing costs, stuff like that, instead of having multiple different loans out for the land, the building, stuff like that. The dual VA I don't believe the guy that brought this up to me is on the call. I wish he was, but I've only heard this a couple times, and it's really you only hear of this if you look into the regulations of the VA. But the long and short of it is, the VA states that if two veterans come together, they can essentially purchase up to a 6 to 7 unit property, 6 living units with 1 business unit. Yes, the VA says that. Yes, that is possible. It's not plausible. So I genuinely hate to say write it off, but I would just kind of write that one off. And because anything over 4 units is considered commercial, and I personally haven't seen or heard of a commercial lender that is set up with the VA to close on something like that. And residential lenders, they won't loan on something over 4 units. So if you hear that one, they're not fibbing to you, they're not lying to you. But it's not really going to happen. The VA rehab renovation loan, that helps you go from, you can kind of wrap everything up into one. Hey, this house is $200,000 and needs $50,000 in repairs. That's just one $250,000 loan. You can get the repairs done, get into it. Obviously, there's a little bit more into the weeds that we need to get into, a little more details, stipulations that I'm just not going to fit into this class today. I don't want to hold you guys too far over the hour limit. I apologize for the power outage. The EARL, interest rate reduction refinance loan, basically just a VA refinance into a lower rate. And this one I do want to touch on. VA, non-VA team up. That's when you have Joe Snuffy and Sally Smith. They've been dating for a while. They want to buy a house. Sally's the veteran. Joe does whatever else, but they're not married yet. Or Sally's the veteran and she wants to purchase with her mom or her dad that's not a veteran, or her son or her daughter or whatever that's not a veteran, or her best friend, right? Veteran and non-veteran. Essentially, the long and short of it is the veteran would still have no down payment required from them. They would use half entitlements on that home, and the non-veteran is going to put down roughly 14.3%. And you can see the math down there. I won't get into the weeds of it. It can get a bit confusing, and I don't want to waste too much more time. But if you have questions on how that would work, please definitely let me know. We can go more into it on a separate call if that's something we plan on doing. And why that might happen is maybe the veteran by themselves can't qualify because of income. So they need to pull in their non-veteran significant other, or a friend or family member to team up. You get that income a little bit higher and qualify for that loan. So, misconception time. We're almost done, guys. Let's knock out some misconceptions and I'll be able to answer some questions you guys have. Here are 10 misconceptions that either we as lenders hear all the time, I personally have heard, or you guys, the people who fill out the sign-up sheet, put in the what do you know / what do you think you know column. I can only use my VA loan once. Not true. You guys know that now. You can use it as many times as your entitlement will allow you. VA loans take longer and are harder to close than conventional loans. Not true. That's just blatantly not true. I haven't really seen the difference. I haven't seen the difference. There's paperwork-wise, everything. You're not going to have a harder time, right? So if you find a lender that tries to say, no, listen, hey man, it's going to be a lot easier if you just go FHA, put 3.5% down. It's a lot. Walk away, because they don't know what they're talking about. When I move, I have to sell my house or refinance it, use my VA loan. Not true. You guys know this one, entitlements. You may have to do that to restore your entitlements, but that's not a prerequisite to using your VA loan again. VA loans cannot be used to buy an investment property. So I have an asterisk next to that one because that statement in of itself is 100% true. VA loans are not investment platforms. But as we just spoke about, you can purchase a 2 to 4 unit multifamily so long as you live in one unit. That is why and how the VA doesn't classify it as an investment property with you living in one of those units. Sellers can only contribute 4% towards buyers' closing costs. Now, for the couple of realtors I have on here with me tonight, I have a chart for you guys on, I believe, the next slide. This is a big one I hear from realtors. And it has some truth to it, and I'll show you kind of where the misconception is. But for closing costs and discount points, there is no limit. Sellers can cover all. Yes, Sophia. Sophia, did you have a question or did you accidentally click it?
Hey, yes, I do. Sorry about that. Quick question about the VA loans cannot be used to buy an investment property. I know you said that they need to occupy one of the units. Is there a time limit on how long they need to occupy the unit, or is it certain they need to occupy the unit until they sell it?
Great question. Thank you. Actually, I think I may be one of the only people that'll tell you it this way. Lenders have their requirements and lenders have their what they want to see. I've spoken to the VA specifically because I had to fight a lender really, because they didn't think I was telling the truth. The VA themselves only require you, their requirement for occupancy is that you must occupy that property within 60 days of closing. The VA themselves, as of 2019, when I called them, do not care how long you stay on the property. They understand things happen. If you have to PCS, if you have to do this, do that. Joseph, I will get to you in 1 second if you don't mind. Lenders typically have that stipulation, that overlay. Lenders are going to be the ones to say, hey, we want to see you in there for a year, which is typically what you'll hear. Now, I've also never come across a lender who, if you have to PCS before that year is up, is going to try and like come after you for any reason. But that isn't to say that occupancy fraud isn't a thing. You do not want to commit occupancy fraud, which is saying, yeah, I'm gonna occupy that. Don't worry, VA. Don't worry, lender. And you spend one night in the house, take a quick selfie to say you live there, move back out to your buddy's couch and rent all 4 units out, or rent the house out as a whole. Because if and when the lender does an occupancy check to verify that you still live there, or a verification of occupancy, and they find out that it's that single family home is on the market for rent that you just bought last week, that's when you can run into some sticky trouble, and you don't want to get caught up on that. It's not worth it. Go ahead, Joseph.
Thank you.
Yes. Did you still have a question, Joseph?
Oh, sorry, I pulled my hand down.
That's
To
okay.
add on that, your insurance going to have an interest whether you live on the property or not as well. And if you are not living on the property and you're using it as a full investment, like he was mentioning, it's going to go under a different loan. Every loan has a due on, can't remember the name, TBI kicking in. What's the clause? The due on sale clause? Is that what it is?
Yeah, due on sale. That's a thing. Yeah.
Right. So if your lender does an inspection and finds out that you are not in that apartment like you said you were, they can activate that clause and then your entire bill can become due one day. So you want to be careful when you're using the VA loan for an investment.
That's very true. Now that due on sale clause he was talking about, that would be something they may instigate if it seems like you pulled the curtain over the VA and the lender, and again the occupancy fraud. If you just bought the house and now you're not living in there, that's typically when they may introduce something like that. They're not going to do that. They're not going to do that due on sale clause if you've been there 6 months and boom, big Army, big Marines, big Air Force says, hey, we're picking you up and taking you across the country, and you keep the house and rent it out. They're not going to do that. But Joseph did have a great point. If and when you do move and you keep that residence, you are going to want to make sure you update your insurance. I haven't personally dealt with this, but I've heard the stories before personally from someone that they didn't do that because they wanted to keep lower rates. Because yes, when you're not occupying the property, your insurance rates are going to increase a little bit. And something happened to his house. He claimed that he still lived there and that wasn't, it wasn't a rental. And turns out they found out, and insurance wouldn't cover the total amount, and so he was out of pocket quite a bit. So again, just kind of the be a decent person idea, right? Don't commit fraud. Tell people what you're doing, and just be a good person. Karma won't bite you in the butt. So sellers can only contribute 4% towards buyer's closing costs, and I'll explain that more in the next slide. VA loan inspections and appraisals require way too much work. Why would any seller want to entertain a VA offer? So that's not true, but I do want to kind of go over some of the points as to why that saying came about. The VA doesn't need the house to be perfect. The VA and the inspections and appraisals just need to make sure the 3 S's are taken care of. Sound, safe, sanitary. They don't care about every little thing, but there are going to be certain things that the VA is going to want. There's some chipped paint, handrails missing, cabinet doors not there, right? Of course, a hole in the roof being fixed. So while you may hear that statement, and I do wholeheartedly believe that's not true, you'll hear it because there are times, and I will back this up, there are times where a home may not be suitable for a VA loan, and the seller knows it. And as a great real estate agent, that agent should also know it and should help educate you when you tell them that that's the home you want to put an offer on. They'll be the ones to tell you, hey, I know you love this home. We can put an offer on it, but I personally think there's going to be a lot of things that need repaired for the VA that the seller may not want to do. Maybe they're just trying to get rid of the house. So they don't require more work. They just want to make sure the house is safe, sound, and sanitary for the veteran to occupy. I have to wait till I ETS or retire before I can even use my benefits. I've heard that one a couple of times. Not true. We saw the eligibility requirements earlier. One coming in late. I think they thought this was a different time zone. The VA caps my purchase price at X, Y, or Z. Again, that is a half truth. Remember, if you don't have an outstanding loan, there is no limit. If you do have one, it's the conforming loan limit. And again, we can do our calculations to figure out kind of where our high point's at in terms of ability to purchase. I think this next one, someone just mistyped. This was one that on the sign-up sheet, someone put as what they know. I think they meant 0% down because they said interest. I figured I'd add it. VA loan is 0% interest. That's not true. It's 0% down payment requirement, but VA loans do traditionally have lower interest rates than their competitors, FHA and conventional. And last but not least, my favorite to deconstruct is I need a minimum of a 620. No one's going to lend to me if I don't have a 620 FICO. My credit's not over 620. I'm not getting a house. Not true. It's just not. Yes, there are going to be more stipulations. Yes, it is going to be a higher cost of the loan. You're not going to get the same rates as someone with an 800. But, Miguel, I'll get to you in just a second. But I hate hearing people saying, well, I'm just waiting to get my credit better. Well, what are you at? I'm at a 590. Let's go. Come on. I'm actually closing someone next week, a veteran that has a 582. I think it's the exact number. And that he's been flying through it. So it is possible, guys. That is one of the biggest things I want you guys, especially as realtors, to take away from this. is that that credit score is not as cut and dry as a lot of people want it to be. A lot of lenders just don't want to do the work, unfortunately, to help those guys out. Last thing I'll say on the credit information, and really any kind of point that was touched on, if you don't think you can qualify for a loan, and especially if another lender's told you you can't, come talk to me. Come talk to anyone on the team here, and we'll either show you what you can do to qualify and set you up for that success path to get to qualifying for a loan, or we'll show you why that lender was really just lazy, didn't want to do the work, didn't want to help you out, and how you actually could become a homeowner way sooner than you thought. Miguel, what can I do for you?
Yeah, is there a down payment requirement on new construction for one-time
On like
closing?
on the one-time close? No. And that was actually a really good question. Thank you. And I'll touch more on that one specifically when I put on that class. It's going to take me a little bit to get everything together, but I want to put that one on because it's a lot of information. But no, just like the normal VA loan, you can go from bare land to keys in hand with 0% down payment. And I think that's what I might do in the future here, maybe my next PCS.
Hey, Rob, can I caveat off that?
So seller concession cheat sheet. I'm going to include this with the recording. I'm going to send out to everybody, especially the people who couldn't make it to this live class. But realtors, this is a good cheat sheet to use. Shows you conventional FHA, conventional investment, VA, USDA. But looking at the VA section, guys, and again, especially realtors, I know you guys are stellar ones, so you guys probably already knew this. But so that we can educate, oh, good Lord, so that we can educate other realtors that maybe have just heard too much misinformation or have gotten those numbers flip-flop for closing costs and discount points, up to 2 discount points, caveat. There is no cap on how much the seller can contribute to those closing costs and discount points, with the 2 discount point limit being the caveat. Now, for that debt payoff and prepaid items, that's where that 4% limit comes in. And yes, it is in a way so that if no matter what the closing costs and such are, that's not included in that 4% limit, if that makes sense. But here's a good cheat sheet. I'll make sure that everyone gets this as well. It's a good kind of thing to have in your back pocket. All right, I know we ran a little bit over. I apologize about the power outage. I was not expecting that one. And I had perfect timing, of course. So anyone that doesn't have any questions or doesn't want to hear some questions, feel free to pop off. I really appreciate you guys coming. But anyone else that has questions for me, now's your time. Shoot them off.
Yeah, Robert, I got one for you.
Anthony, I think I saw yours first.
So does the GI Bill qualify as income?
No, unfortunately, which good question. Thank you for touching on that. So no, if you are receiving income from your GI Bill, that is not going to be qualifying income enough because it's not going to last. You are going to be required to have some form of employment to be able to use that employment income as qualifying income. Thank you, Anthony.
Okay. On that, how long do you need to be employed for that income to be considered?
Awesome. So we like to see 2 years of employment. If there's a gap, we'll probably ask for what's called a letter of explanation. And of course, in maybe a situation like you're in right now, your explanation would be, I'll get to that question in just a moment. Your explanation would simply be, I got out of the military, or I did X, Y, and Z, and then I started some schooling. I wanted to focus on my schooling, didn't have employment during that. If my significant other was providing, bill payment for household bills or whatever it may be. I graduate in July of 24, and that's when I started my employment. It'll be a little bit different on how we calculate the qualifying income. If you had income during your GI Bill time, or if you had that kind of long gap and then started something pretty fresh. but kind of a case by case, depending on a few other factors that we'll want to look at as well. But that's a good question. Thank you. Miguel?
Yeah, do you guys ever do or work with, I know lenders, it varies, but you ever work with like an exception to repairs based on an appraisal, like a lender required repair?
So and that's a good question. The repairs that we would require as the lender would solely be what the VA requires. If the VA says they need X, Y, and Z, we are going to need X, Y, and Z, because if not, the VA is not going to back that 25% guarantee for that loan. Does that make sense?
Yes. Yes.
Joseph, do you have a question?
I keep using the mouse on my computer and I'm on my phone. Did you cover, by any chance, the qualifying incomes in relations to VA disability?
No, and I believe someone else in the chat put that question about VA disability being able to be qualifying income. Yes, that is able to be qualifying income. A lot of the times that's something that, if say you get out and you're at 60, 70%, that's a good chunk of income. And we are able to actually use that income and in certain situations actually gross that income up to actually be more qualifying income, if that makes sense. Because since your disability is not taxed and we always go off of your gross income, in cases we can actually gross that disability up to reflect a higher income. So good question. Thank you. Miguel, did you have another question or is your hand just still raised? So I'll make sure I get to it. Okay. Let me go with Clayton real quick.
Yeah, it was on the construction loan. Did you say you're gonna have a class coming up on it, or is a construction loan and the one-time deal the same?
Yeah. So the one-time closed construction loan, there's a lot to it, and it's not something that I can go over in just a brief one slide thing or just a brief. I didn't want to make this presentation too long, but it is quite powerful, and there's a bit that goes into it. So I want to make that a whole class in of itself. But if you have specific questions or you're looking to move forward with that, we could totally talk offline about that sooner. I'm not sure how soon I'll be able to have the class, but if you have questions, we could talk about that for sure.
Great, thank you.
Absolutely. Let me go with Mr. Lightfoot.
Okay, so just say if a veteran qualifies for $1 million house,
Right.
are they able to buy 2 properties at once with that?
2 separate properties?
Yes.
No. So it would have to be the same property. Now they could purchase let's say, outskirts of Nashville, outskirts of another big city, a 4-unit or just a duplex, right? Again, they have to be attached, but a multi-family property, if that was $1 million, right? Which of course near the bigger cities they get up there in price. That would be fine, but it would have to be one parcel, one plot of land, and one building, right? One attached. Regardless of the units, they all have to be attached. Does that answer your question?
Yeah, but how you said that you have a house in Tennessee and one in San Antonio, right?
Yes.
So how were you
Yes.
able to purchase
So
those?
that's a great question. So when I was in Tennessee, when I was stationed at Fort Campbell back in 2021, I believe I bought that house. I bought that house, lived in it, and then when I got my orders to PCS, I PCS down here to Texas, and I still had enough entitlements left to be able to purchase this home while retaining that one in Tennessee, which I then converted into a rental. So yes, technically between the 2 houses, I used up about $700,000 of entitlement, but I bought them at different times.
Okay, so you'd have to do it at separate times in order for that to count, I guess.
Yeah. And that's kind of how people accrue. You know, you hear people, maybe they have 6 rental properties and you're like, what in the world? It's because their first duty station, they bought one, kept it until their next duty station, bought another, moved, PCS'd again, these 20-year guys, right? PCS'd again. Maybe they refinanced that first one to get their entitlements back. Maybe they sold something, right? But that's kind of how you could accrue properties over time. Jeremy.
Hey, so for the properties having to be one building or one structure, is it possible to do something like a breezeway that connects, buildings if it's all shared foundation? So like
That's actually a great question, and let me get back to you on that one. That's actually a really good question I haven't come across before, and I believe what he's saying is, let's say you have same foundation, but you have 2 units here, and then there's a shared walkway that connects, same foundation, but it connects to the other building per se that has 2 units. Is that what you're talking about?
correct, something like the main house, and then maybe you do a circle around the back and you have 3 individual, 2-room cottages, if you will. They're all
Okay. In
cement foundation.
Right. Okay.
You make
In that
go ahead.
Sorry. That in that type of layout, that would be something where I probably have to see it and then probably take that listing and talk to my underwriters and my processors and have them. They're ultimately the ones that they're kind of the voice of the VA. They know the ins and outs of the regulations like no one else. So they probably, based on that quick description, I'd say it's likely not, because they are more separated than they are together, if that makes sense. Now you can have, and it's called, and I won't get too far into this because there are some bunch of stipulations, but ADU, accessory dwelling unit, kind of like your mother-in-law suite, right? Kind of on the the back little corner of your property, got that small little cottage, maybe 1 bed, 1 bath. Those types of things can, in certain situations, be allowed and not be considered multifamily.
Perfect, thanks.
Thanks. Let me go with Joseph again.
For the eligibility, can you go over the spousal eligibility for veterans?
So if you are a veteran spouse, you are eligible. If you are a veteran, you have to be married to be considered spouse, right? You guys are eligible. Now, if you are the surviving spouse, that's when you're, regardless, still eligible, and you're eligible for the funding fee exemption. But just because you're spouse and stuff doesn't mean you're exempt from the funding fee. The funding fee would still, depending on the scenario, still be there. But yes, the spouse can be on there without having to do any additional down payment or anything like that. Did that answer your question?
Yes. Thank you.
Okay, perfect. Yes, sir. Mr. Lightfoot. I like that last name.
Sorry about that. I still have my hand up.
Oh, okay. No worries. We'll make sure I didn't miss anyone. And let me check the chat here real quick to make sure we covered. Okay, yeah, the VA disability. Yep. VA disability is qualifying income because it lasts the lifetime of the veteran. Same thing with Social Security income, stuff like that. That kind of stuff. Disability, Social Security, that kind of stuff is going to last your lifetime. Child support, so long as it lasts more than 3 years from the close of loan, can be considered. So if your child is is 16 years old and the court order stops them at stops that support at 18, unfortunately we can't consider that. But if they're 6 years old and it goes until they're 18, then that's something that we can potentially qualify, use as qualifying income. So definitely when you're speaking with a lender, you're going to want to just let them know everything. Let them know as much income as you have, whether it's some side job you do on the weekends, whatever it is. If we can use it as qualifying income, we absolutely will. And if we can't, we'll explain why. Go ahead, Joseph.
Thanks for mentioning that. On the flip side of that, if you have anything negative, make sure you mention it ahead of time. I had a deal that went all the way 1 week before closing. We did the inspection. The seller actually put in a $2,500 water remediation system because there was arsenic in the well. And come to find out, my client had an open child support case, and the lender would not fund the loan because they didn't know how much it was going to affect it. So from the very beginning, when you're talking to the loan officer, just be straight up about everything. It's going to save everybody a lot of time.
Absolutely. Last thing any lender wants to do, let alone myself or anyone on the team, is deny you. The second to last thing we want to do is waste anyone's time, whether that's your time, the realtor's time, the seller's time, or of course, our own time. Just be honest, be upfront, and be sincere. If you're honest about absolutely everything with your situation, I'm going to do my darndest to get you qualified, right? I'm going to spend hours reading through the regulation to figure out where it tells me that I can add this extra $10 of your income that's needed to qualify, whatever it takes, right? I'm gonna do my best to help you guys. Anyone on this team is, and any lender that's worth their weight is gonna help you out to get qualified. But we can't be scrutinized if we get to the closing table and the underwriters, because they do their best job, but sometimes they don't find things out until the last minute too, right? They might not be able to find that court record that shows you have a pending child support case. So he's exactly right. If anything, even remotely related to income or assets or debt, just let us know. Do yourself a favor, bring it up, and we'll be able to either say, no, you're good, or, hey, hold on. Yeah, we're going to need documentation on that to make sure we are on the right page with things. Because last thing you want to do is waste your own time, waste someone else's time. If you guys have any other questions, I'm free as long as you are. You guys are free to go when you need to, but if you have any other questions, I'm here all night to answer them.
Thank you for the class, Robert.
Absolutely. Thank you guys for coming. Thank you guys for showing up, and thank you guys for interacting and engaging and asking questions that you have. I am going to, again, upload this presentation to the Google Drive, this recording. That way everyone else that didn't get to make it today can also review it. If you guys have any questions with anything, whether it be loan related or insurance related, business loan related, really anything to do with any of that, please come to me, let me know. I feel like I'm a pretty approachable person, and I'll never steer you wrong. If I don't know it, I'll find it out for you. And if that's not the answer you want to hear, I'll still tell you because I believe in integrity, honesty, and transparency. You guys have a great rest of your week. Happy New Year. I hope everyone has a great, fantastic 2024. And I hope to see some of you guys maybe this time next year raising your hand saying, yeah, no, I've used my VA loan before. So thank you guys and have a great rest of your week.